Gap insurance is a type of insurance that covers the difference between the actual cash value of a vehicle and the amount still owed on a loan or lease if the vehicle is totaled or stolen. This type of insurance is often required by lenders when financing a vehicle purchase. To understand how gap insurance works, let's consider an example. Suppose you purchase a new vehicle for $30,000 and finance the entire amount with a 5-year loan. If the vehicle is totaled in an accident just 1 year after purchase, the insurance company will pay the actual cash value of the vehicle, which may be $20,000. However, you still owe $25,000 on the loan, leaving a $5,000 gap. This is where gap insurance comes in. Gap insurance covers the $5,000 difference between the actual cash value of the vehicle and the amount still owed on the loan. Without gap insurance, you would be responsible for paying the $5,000 gap out of pocket. Gap insurance is usually purchased as an add-on to a comprehensive or collision insurance policy. The cost of gap insurance varies depending on the insurance provider and the type of vehicle being insured. It's essential to review the terms and conditions of the gap insurance policy to understand what is covered and what is not. In general, gap insurance is a good idea for people who finance a vehicle purchase with a loan or lease, especially if they make a low down payment or have a long loan term. It's also a good idea for people who drive a lot or live in areas with high crime rates, as these factors increase the risk of a vehicle being stolen or totaled. To get the most value out of gap insurance, it's essential to shop around and compare rates from different insurance providers. You should also review the terms and conditions of the policy to ensure it meets your needs. Additionally, consider the cost of gap insurance and whether it's worth the added expense. In conclusion, gap insurance is a type of insurance that covers the difference between the actual cash value of a vehicle and the amount still owed on a loan or lease. It's an essential consideration for people who finance a vehicle purchase, especially if they make a low down payment or have a long loan term. By understanding how gap insurance works and shopping around for the best rates, you can protect yourself from financial loss in the event of a vehicle being totaled or stolen.